Hi guys, welcome back to Clearing Spotlight, where markets meet clarity and institutions navigate liquidity, risk, and infrastructure. Thank you for joining us on Clearing Spotlight. Today's guest, we have Amy Zhang, Head of Asia Pacific at Fireblocks. Amy, how are you doing?
I'm doing great. How are you?
Great, I'm doing good as well. I love to have Girls Talk. You're our first female guest at our podcast.
Oh, really?
Episode.
Wow,
Yes.
okay, I didn't know that.
Yeah, why don't you give us a briefly introduction of yourself and Fireblocks as well?
Absolutely. Hi, everyone. My name is Amy. I lead Fireblocks' APAC business. I've actually been at Fireblocks now at this point for 5.5 years. When I started, we were a much smaller company back then. And the first year of our journey was really to figure out, like, does the success we've had in Europe and US work for us regionally? And if we were to continue to invest in the region, what would that plan look like and what we need to make sure our customers are being supported? Pretty quickly, at that time, we realized that, in fact, yes, the APAC customers do want similar sets of product and features like our peers in Europe and in the US. But what we needed was really localized the sets of team on the ground and the sets of team support to engage with the customers. So fast forward to where we are now, Fireblocks supports over, I would say, 2,400 customers globally. In APAC specifically, we're coming up to close to 500 clients, and they go from your two-man in a garage doing crypto trading, all the way until some of the largest financial institutions, banks, asset managers, and everyone really in between.
Thank you for the introduction. Like, to start us off, Amy, can you tell us how you would describe the current state of stablecoins adoption in Asia and what's driving its momentums right now?
Yeah, I mean, I think there are a few key highlights. Number one, I think is a really important point. There seemed to be a level of change in trust, meaning that for the first time since, the beginning of modern finance, billions of dollars are being moved around every single day, messaged and settled using a different technology that actually a bank and a financial institutions is not really involved in that transaction. Right? If you were to break that down, it's really around three components, why that trust is becoming so important now and why people believe in this technology and this asset class. Number one is there's a lot of clarity on regulation. So in all countries in Asia, they're either already having established stablecoin regimes or on the path of creating one. So I think that's one that's really changed in the last year. And number two, I think there's a lot of establishment around the confidence with technology, right? If you think about this year particularly, and last year, there's been a lot of hacks that happen in the space. So really the maturity of the technology and getting institutional player comfortable with what they need to do in order to interact with this technology is super important. And the final piece of the puzzle, I would say, is this conversion of liquidity. Really, the nuance is around the ability for them to directly on and off ramp, which is what we call primary minting and burning, as well as really getting access to secondary liquidity, which makes overall this asset class very easily for merchants to use, for them to send money around the world.
Cool. All right. Yeah. Since we talk about like stablecoin for our listeners, like how would you define stablecoins in a simple terms for our listener? Maybe they first listen about stablecoins and what makes them such a game changer for institutional players right now.
Yeah, I mean, I think there are a few folds, right? So when you and I want to send money from one to another, there's actually two things that is happening. There is the messaging layer, which is me telling you I want to send you this much money, and then there's the actual settlement layer, which is bank to bank actually then need to move the money from my bank account to your bank account and vice versa. And everything in between is serviced by a huge gambit of players. So there could be payment service providers, who is responsible, how me and you connect from one another on the messaging side of the house. But either way, all of these nuances, this component of bank-to-bank settlement. And the reason why bank-to-bank settlement happens is a few folds. Number one, historically, everybody leaves their money at a bank. So in order for me to move from my account to your account, a bank has to be involved in some shapes or form. But also banks take on the responsibility of risk management, because the reality is what you and I see in our bank account and that number you see on your bank account, that is not the amount of money that's in a bank, right? Banks issue loans on top. They have what we call fractionalized banking system that we're all operating today. So banks need to manage that risk of moving $1 that I see on my screen to $1 you expect to see on your screen. So that's the background of how money movements today. And where stablecoin fundamentally differs is number one, the messaging as settlement happen in a single transaction. What that really brings is efficiency, right? The time delay is a challenge for people to move money around the world. But now if you and I could agree settlement could be done instantaneously, there's a saving time, which then translate to cost and also revenue opportunity. If you have stable coins, I can send money on demand because it's instantaneous. And it's no surprise that today, some of the quickest adopters of stable coins in terms of industries that have high working capital needs. So think about commodities traders, shipping companies, people that says, if I can move my money 100 million a day, 10 times, I make $1 billion. If I move it one time, I make 100 million. So I want to be able to turn it over and over again. So those industries have already started to adopt this asset class in a really significant way. And obviously, finally, stablecoins is really dollar to dollar backed. So in most regulated jurisdictions, the total amount needs to be kept in a liquid asset that is effectively, depending on where you are in jurisdictions. But the dollar amount that you see in your one stablecoin has the equivalent of treasury backed for $1. So it's not operating on, let's say, a fractional banking system that you might see in your bank account, for example.
That's so true, and you have been explaining very well and clear. So there's been an increasing talk about also stablecoins outpacing traditional cross-border system as well. Like from your perspective, what driven this shift?
Yes, I think the number that people are speculating is somewhere between $200 trillion in 2024. And I think in stablecoins, we moved around like 20 trillion, something like that, right? So it's about a tenth of where that is. And even breaking down that component, the $20 trillion that we see in stablecoin movement around the world is not mostly done in the traditional industries. So the talk about how like crypto stablecoin movement is outpacing traditional industries, I don't necessarily think that is the case yet. However, there are clearly industries that, in my opinion, are being underserved by the traditional cross-border or transaction banking system that has already organically adopted stablecoins. So what are those industries? Obviously, number one is crypto trading, right? If you think about the genesis of stablecoins, why it's being utilized, crypto trading, due to the fact that these players need 24/7 instantaneous large movement and they're largely unbanked back in the days, they're naturally adopting stable coins, which then is the base of what we consider today the stablecoin liquidity. Then thereafter, I think the sets of industries that are now looking at this space, number one is really around the new economy. These are like web-based businesses, think e-commerce platforms, creator-based platform that has to pay. In essence, like digital businesses that has the challenge of paying a lot of people in a lot of countries, which historically they would have paid a ton of money in their either to their bank or to their payment service providers to facilitate that flows. But more importantly, operationally, it's very difficult for them to manage because there's such a large problem of paying like tons of thousands of creators all around the world. The other sets I would say are what I mentioned earlier, which is our like the working capital challenges, right? So these are your commodities traders, shipping companies, gold traders, folks that, again, wants the money to move faster, but maybe not have that large scale banking partner that they already had to help support them.
That's very incredible insight. So let's move a little bit forward. Like according to the IMF Asia and the Pacific recorded the highest level of coin activity in 2024. Mm-hmm. So regarding to your CNBC interview earlier, you mentioned that Asia's regulatory like clarity as a catalyst for adoptions. Mm-hmm. Could you elaborate more on this? How this clarity is attaching the financial institutions and PSPs to build on stablecoin rails?
Yeah. So there are a few things that I think the regulatory environment is creating a lot of clarity for these players. Number one is really on the issuing side, right? Having clear regulation around which stablecoins can be managed in that country and are stablecoins treated as legal tender is very important for banks and PSPs to figure out how do I interact with these assets. Number two, if I interact with these assets and they sit on my balance sheet, what does that mean for my overall business? So right now, both Singapore and Hong Kong is going through a consultation at the moment to identify how stablecoins should be treated on the bank's balance sheet. And in order for that to happen, businesses needs to have, I would say, rules that they can follow so that they're able to then operate at scale afterwards.
So we are also seeing more like traditional institutions exploring with stablecoins recently. So what does it tell us about how mainstream finance is evolving right now?
Yeah, I mean, there are a few areas that I think mainstream finance is happening. There's a clear convergence between, I would say, TradFi players and digital asset use cases, and then also the regulated crypto players getting access to the TradFi use cases. So what I mean by that, the ability for either a bank or PSPs to offer stablecoin as a rail is a top of mind for really any of the institutions that we're engaging to at the moment. If you're a bank and you're not one of the banks that is banking Circle or Tether, or some of the larger stablecoins available out there, naturally you're losing deposits to these banks that are banking them. So bank all recognizes now. They're either figuring out how they can offer services to allow stablecoins to be issued. They themselves are issuing stablecoins, or they themselves are figuring out a way to interact with stablecoins to facilitate the transaction banking needs for those sets of customers that they're interacting with. And on the PSP side, absolutely, right? Like to them, this is just another rail they can add on to the existing system. But the difference is the margin, the spread that they can make on a stablecoin payment rail versus a fiat payment rail. So not only for the PSPs, this is like a cost-saving exercise for them, but also it gives them access to a new set of business lines. Also gives them better access to potential revenue as part of their operations as well. I think there's a lot of excitement around tokenized security and the next phase around a real-world asset tokenization. And I think the businesses actually does extremely well is the flip side, which is the traditional crypto players who have a captive user base that are comfortable with digital asset as a principle are now launching kind of tokenized securities and getting really good results on the back of those.
What do you think, like, how about the institutions balancing innovation with risk management, especially when entering an on-chain treasury and payment system we just talked about?
I think what we're seeing is regulated institutions are figuring out what are some of the things that actually need to go on chain and what are some of the things that we can leverage the existing tools that the bank has or payment service provider has, because changing that risk management solution is an incredibly difficult, costly, and probably has really no room for error when it comes to that kind of integration. Right? Mm-hmm. So I think for a lot of institutions, they're seeing like what needs to actually go on chain and what is the mechanism that needs to happen in order for that to become a reality and what kind of risk management component actually can be managed off chain. So for instance, we are seeing that on the tokenization front, right, you can use smart contracts and blockchain to manage the approval process, but actually most issuers have really robust internal process as Web2 already to manage the approval collection side of the house. So a lot of the, call it approvals, the permissioning, the risk management actually done in what we call the Web2 way. And once all of that system is passed, they're leveraging a really secure solution, and Fireblocks could be one of the solutions for them to manage the creation of the assets going on chain. Right? So they're seeing the split of like, I don't have to do my end-to-end life cycle on chain, but I want to be able to do some Web2 solutions, and then some of them are going to be, because that's where risk management sits, and then really the Web3 solutions is really when things goes on-chain, this be moved around. Traditionally, most players have a really good Web2 solution. It is usually when you then need to interact with other businesses that then this asset needs to go on-chain to facilitate that like really ease of asset transfer, alignment around who owns what, and ultimately if you want to get access to the crypto ecosystem, you're going to need some on-chain versions of that. So usually we're seeing a lot of like internal bank-to-bank settlements are done in a permission blockchain perspective or a private ledger. But the second you want to interact with the public space, people are putting stuff on public blockchain afterwards.
That's kind of true. Like they have their options to do that. So thank you, Amy. Let's shift gears to another valuable topic like digital assets. When people think of digital assets, they often think of holding Bitcoin or crypto directly. But treasury management goes far beyond that actually. So from your perspective, what does the digital asset treasury management really means in the practice?
Yeah. So let me give you a simple example, right? So if you are today and you are a trading company, and let's say you've got $1 million worth of working capital that's sitting in your bank account, that you have it sitting somewhere, you might need to draw down on it for certain things, but it's really there as a buffer, right? So when we think about treasury management for traditional industries right now, is they're looking at, they've got dollar-based assets, and they effectively want to figure out a way to earn more yield on the back of their dollar-based asset. And a really simple way for them to manage that is to convert that assets into some sort of stable coin, and then effectively they can directly using that stable coin to redeem, let's say Buildle, if they're are able to get access to the BlackRock money market fund, they can very easily convert the stable coin into the money market fund, earn yield, and whatever they need afterwards, they can convert it back into the USDC to send across the world. And that flow actually looks a lot like how a crypto trading firm manages their treasury today. We just are used to this world 24/7. Like no crypto trading firm is going to take the USDC and put it back into fiat and sit in a bank somewhere. I think right now in the news, people see a lot of listed companies buying BTC, buying ETH as part of their treasury play, which don't get me wrong, like that also makes a lot of sense because these are some of the highest grossing assets in the last decade, right? And if you are a company that wants to look at it from an allocation perspective, then yes, there's a lot of those excitement happening in our industry, and also traditional industry as well. But I think more openly, like a lot of companies have working capital and figuring out a way to manage their working capital, leveraging already existing ecosystem in the digital asset space is an avenue a lot of people are exploring.
How about like treasury teams thinking about diversification today? Are they still focusing mainly on Bitcoin and Ethereum, or like other stablecoins and tokenized assets starting to play the bigger role right now?
So I think it depends on the intent of why they're having a treasury play. For some corporates, the intent is to announce a treasury strategy, which hopefully is net asset accretive to their business, and then ultimately improves their their share price and all of these other nuances afterwards, right? In that space, I think most of the treasury play is either looking at very like super safe, blue chip, what we consider crypto holdings, or I would say they are looking at what I mentioned earlier, which is to improve their working capital using stable coins and the real world asset ecosystem that exists on that front today. But in general, I think what we're seeing with the corporate side is it comes down to really simply, if I use stable coins on my corporate treasury, what kind of benefit could that bring me? And then also, if I am using crypto as part of my treasury as holdings, what kind of benefit would that bring me?
That's a very good point. Let's dive into another like section. So Hong Kong has introductions the stablecoin audience earlier. Aspires and Leap frameworks shows a strong commitment to digital finance right now. So how is the shaping confidence among banks and payment service provider you can see?
Yeah, I mean, so payment service providers specifically in Hong Kong is now falling into the new regime to get a broker-dealer license in some shapes or form, right? So that's an additional new license that historically they would have been able to operate in their traditional licensing regime. So I think right now they definitely recognize that, hey, this is something that I need to get involved in, I need to apply, and there's a lot of business opportunities for folks to really operate in Hong Kong to do that. I would say what's also interesting in Hong Kong, and again, I'm seeing more of that use cases, which is like tokenized security use cases. And it's no surprise, right? Hong Kong has always been more of a capital markets hub, versus Singapore has always been more of a trading hub with like shipping, commodities, FX brokers coming in and out of the region. So naturally, the two countries are aligning to economies and traditional economies that are most similar to how they were operated previously. Between the two right now, they're definitely the leader in what we consider the payment space or stablecoin payment space in terms of regulatory framework and alignment. The next few I think that are coming out is really about like Japan. Japan is also putting a lot of a process in place, and obviously Korea right now is looking at a Korea One stablecoin legislation. So all the countries in Asia are I would say by the end of 2026 would have either established regulatory frameworks in place or have already gone through cycles of giving the license out enforcement and people to operate for both stablecoins and digital asset trading.
Since you mentioned about like Singapore and Japan, so how do you see Hong Kong positioning itself compared to these two countries? Like, is it becoming more like a liquidity or custody hub or like regulatory sandbox for innovations?
I think you cannot talk about what Hong Kong's positioning could be without talking about China and the largest corridor in traditional rail. Whether or not that's going to transpire in the recent years and how that's going to play out given the regulatory landscape between Hong Kong and China, I don't have clarity there. But the reality is like Hong Kong and China is one of the biggest corridor of money movement. And hopefully as more and more licensed entities in Hong Kong are allowed to issue stable coins, that story gets explored in some shapes or form because there's clearly a lot of needs that needs to happen in that space, right? If you think about the other perspective, you know, China is one of the biggest importers of, for example, iron ore. And the iron ore industry in the traditional commodity sense is all done in US dollars, right? So there is like, I think a lot of angles that could transpire in Hong Kong, not just looking at like a US dollar stable coin, but other currency stable coins and figuring out like how can stable coin, the technology can add on additional utility to the underlying currency. That is like what I hope Hong Kong could explore that part further and how that continue to foster. The other thing will be just capital markets trading. The Hong Kong capital market for equities and bonds and all of these markets are much bigger, right, than the other territories. So maybe that will then transpire as well. And the Hong Kong licensing regime is also really interesting in the sense that it is one of the only few places in the world, if you have a VASP license, you can offer the securities token on the same venue as the crypto assets. So there's a lot of cross-pollination that can happen with the current context that Hong Kong has today.
True. I think we are still looking forward to different countries where they have the different regime ongoing in the future. So let's move a little bit more about in the future side. Let me ask you some questions about your future outlook on stablecoins and digital asset treasury management. So what's your outlook for APAC roles in global digital finance over the next 3 to 5 years?
In terms of adoption, there's a lot of studies that have already shown Asia's already one of the largest adopter and users of stablecoin. I would hope that Asia would then adopt the same demand but in a different currency. And the reason I'm saying that is because today, the stablecoin story is a US dollar asset story. And I think as more and more domestic markets having their internal regulatory, I would say, sandboxes and licensing that could allow players to operate, I suspect there'll be more and more other currency stable coins that could be utilized domestically and also cross-border in Asia, right? And I think that's what I hope to see in the next 3 to 5 years. I think in the next 3 to 5 years, I wonder if there's like opportunities to eliminate that as a requirement. And those are actually quite in line with a lot of the central bank strategy at the moment as well.
Okay. Thank you very much. I think we can go to the last questions finally. What advice would you give to the financial leaders or founders who are still hesitating about integrating stable coins into their strategy?
I think for traditional businesses, whether they're payments companies, banks, corporates, they really just need to see stablecoins as just additional rail that they can add into their system, right? Yes, they think there might be a lot of work that needs to get resolved in order for them to participate in this industry. But I think that's number one. Number two, my hope and also my view is a lot of times people get shied away from regulation, but regulation is opportunity, right? If this is now with digitized assets and stablecoin, all these nuances, the ability for PSPs and the ability for brokerage firms to get licensed to operate in this space which historically and before only banks could operate in that space, is a massive revenue opportunity for a lot of these players. So we're definitely seeing PSPs and corporates are now trying to figure out a way to be their own bank effectively. And on the flip side, banks are not sleeping on this opportunity either, right? They recognize they have to improve their capabilities and their existing stack so that their end user, which would be the PSPs and the merchants and the corporates, can leverage their banking services to operate in the stablecoin world as well.
There we have it. Thank you very much, Amy. I think anyone listening to this episode, if they're interested to get into this stablecoin railways, feel free to reach out Amy. Fireblocks definitely able to help you guys to go on for the explore the stablecoin railways. Thank you for sharing your valuable insights and how stablecoins and digital treasury management are shaping the future of finance. So, and to all our viewers and listeners, thank you for listening and joining us. It's always great to shine a light on new ideas. Wherever the market moves, we will be here to keep the things clear. You have been watching and listening to Clearing Spotlight, bringing market clarity to life. Stay tuned. Thank you.